Good morning, Dr. Debisu. We are American Airlines team, and today we are going to be presenting about the stock valuation on American Airlines. Our team is composed by 5 members: Jocatia, Anna, Mary, Allyson, and me, Edvandra Pacheco. Over here, we have our presentation or review, which is basically everything that we're going to be covered in our presentation. We're going to be explaining about American Airlines overview, the company competitors, and also we're going to be explaining about company performance, DuPont analysis. We're going to have financial statement for 2020, and we also going to be explaining about the stock valuation, and last we're going to go over our recommendation. When it comes to the company overview, American Airlines was founded in 1930 from a merge of approximately 85 companies. In this merge, the two remarkable companies were Robson Aircraft and Colonial Air Transportation. Robson Aircraft was first organized as a general flying service and manufactured in Missouri 1921. The company mail route was flown from Chicago to St. Louis on April 15, 1926 by Charles Lindbergh. Colonial Air Transportation started flying mails a little later on June 18, 1926. In 1929, these two companies joined together to form a holding corporation known as the Aviation Corporation. American Airlines has been in operation for over 90 years. The corporate headquarters are located in Dallas, Texas, and the company also serves about 50 countries globally. The company continued expanding significantly, and between 1970 to 1990, it had globalized its operation to become not only a domestic carrier but also an international carrier. In 2008, the company was the first airline to provide a full flight internet and was the first airline to make a partnership with Environmental Protection Agency. The company also offered an average of 6,800 flights daily to 350 destinations in 61 countries. When it comes to the market share, American Airlines hold approximately the 80.5% of the market share in the United States. Thank you so much. And now, Jocatia will go over the main competitors of American Airlines.
Hi, this is Jocatia Peres, and I will start talking about the competitors. So we just got the main competitors for American Airlines. There is Delta Airlines and Southwest. So they are the top five in the aviation industry. So we got a look on market performance. So American Airlines has the market cap of 6.83 834 and Delta 28.81 and Southwest 2341. So to say that America, Delta, and Southwest hold 53.7% of the market share. So if you can see on the table that Delta has no, Southwest has the most share, that is 45.25, but the three of them, they are the most they hold the most market share. So we have the volume of share too, that American Airlines has the most volume of shares of the 44,000 254 and 829. So it makes the American airline the biggest volume of share. So the competitors that we just got, that we can see that Delta, Southwest, and the American airline, they have uh, between Delta and American Airlines, they have each other like directly in their signs when it comes to industry competition. So from the airline weeklies, they state that it appears to be a beginning of the new explicit rivalry between the two aviation giants. So, and it has come to a light as a result of American press reference in early 2016, in which the executives of American almost exclusively focus on tearing down Delta. So there will be like our information about the competitors.
Current ratio measures the liquidity of a company by looking at the ratio of the current asset out of current liability. American Airlines experienced a decline in their current ratio with each year, fluctuating from 0.61 in 2017 to 0.45 in 2019. This decline is mainly due to increases in accounts payable, accrued salaries and wages, and operating lease liabilities. Southwest has maintained a higher current ratio over all 3 years, making it the most liquid of the three airlines. Total asset turnover measures how efficient a company is using its assets to generate revenue. The higher the ratio, the better the company is performing. When comparing 2017 to 2018, American Airlines experienced a decrease in TAT from 0.82 to 0.74. On the other hand, when comparing 2018 to 2019, the TAT has slightly increased to 0.76. This is due to an increase of 3% in revenue and a better use of the assets. Southwest maintained a higher TAT ratio over all 3 years. Leverage ratio measures how much capital is being financed by debt and the ability of the company to meet its financial obligations. The lower the ratio, the better, indicating that the company is less dependent on borrowing for its operations. American Airlines experienced a decline in leverage ratio from 0.44 in 2017 to 0.36 in 2018, and then a slight increase from 2018 to 2019. American Airlines' leverage ratio fluctuated at a higher level than Southwest and Delta. This profitability margin indicates how much profit the company makes on a dollar of sale after paying all costs but before paying the interest or taxes. The higher the ratio, the better. American Airlines experienced a decline in operating profit margin of 286 base points from 2017 to 2018 and an increase of 42 base points from 2018 to 2019. This increase was primarily due to an increase in earnings before interest and taxes of 8%. Compared to its competitors, American Airlines has the lowest operating profit margin during the 3 years. The price to earning ratio measures the share price relative to the annual income earned by the company per share. The higher the ratio, the better. American Airlines experienced a decrease in their PE ratio from 2017 to 2019. It went from 13.2 in 2017 to 7.6 in 2019. This represents a decrease of 43%. For 2019, American Airlines appears to be the most risky of the three airlines, while Southwest appearing to have the strongest opportunities for growth.
The DuPont analysis is frequently used by companies to decompose the different drivers of return on equity and help investors to compare the operational efficiency of the company. The following table shows a DuPont analysis for American Airlines from 2017 to 2019. In the table, you will see three components that we use to calculate the return on equity. We use the equity multiplier, total asset turnover, and net profit margins. And we would multiply those three components together, which will give us the return on equity. For 2017, American Airlines saw positive return on equity, indicated as strong financial leverage. This means there was a good use of debt for the company management. Another factor is the efficient use of assets to generate revenues, thus resulting in higher net income. For 2018 and 2019, the airline saw a huge decrease in the return on equity. This was due to poor debt management, which is reflective in the negative leverage as the factor. For our financial estimates of 2020, we would look into the historical data for 2017 all the way to 2019. So during 2017 and 2018, American Airlines had an increase in revenue of approximately 5% for each period. The increase in revenue for those years was due to increases in revenue passenger miles and increases in cargo revenue for domestic and international markets. In 2019, the company saw a slight reduction of revenue due to some remediation work of certain aircraft fleets, such as the 737-800, and also the grounding of the 737 MAX. This actually resulted in the cancellation of approximately 27,600 flights. However, the decrease in revenue was partially offset by an increase in revenue in the Latin America market, which is why on the slide you'll notice there was an increase in revenue by 2%. For 2020, the company was estimated to increase in revenue due to the opening of new gates in Dallas, Texas, and Charlotte, North Carolina, with direct destination to places in Europe and Asia. However, at the beginning of 2020, the World Health Organization has declared the COVID-19 as a pandemic. The governments have closed borders, putting city in quarantine, which has affected the economy, especially the airline industry. American Airlines has been in the obligation to reschedule or cancel an important percentage of its flights and has started to offer severance packages to their employees. As a consequence of this pandemic, we have estimated a decrease in revenue. Echoing from the previous slides, now you will see our financial estimates for the 2020 year. Starting with the revenue, we have estimated a decrease in revenue of 5.75%, which is roughly $43.1 billion for 2020 as compared to 2019. This was a lot to do with the pandemic that has affected the airline industry as a whole. In terms of costs, American Airlines has increased its costs due to repairs for the remediation. This condition has affected the company's net income. Under the assumption that COVID-19 will decrease the company revenue and increase costs, we have estimated a decrease in operating income by 17%, which is $3.1 billion, and a decrease in net income by 33%, which is roughly $1.1 billion in net income. The factors that contribute to the decrease in net income are primarily due to the increases in compensation for the severance package to its employees, storage, and other costs, partially offset by a decrease in fuel and a decrease in taxes. The dividend payout ratio for the company in 2019 was 10.56%, with a total dividend paid of $178 million or 40 cents per share. For 2020, we are estimating that shares of 430 million with a total dividend to be paid of $172 million or also 40 cents per share.
Stock valuation refers to the process of determining the intrinsic value of a company, the value that a share of a stock should be worth at. In this case, we will calculate the value of the stock for American Airlines. To calculate it, we will apply the non-constant growth stock method, where we will need to obtain the expected rate of return for American Airlines, the future dividends, and the dividend growth rate. To calculate the expected rate of return for American Airlines, we applied the capital asset pricing model, where the formula was expected rate of return equals the risk-free rate plus beta times the market risk premium. The beta of American Airlines of 2.04 was obtained from Yahoo Finance, where they considered the company information for the past 5 years to make their calculation. The risk-free rate of 0.29% was obtained for the 3-month Treasury bill secondary market rate. This date was retrieved from the Federal Reserve Bank of St. Louis on April 21, 2020. The market risk premium of 5.64% was obtained by pulling the monthly prices for the past 5 years of the S&P 500 market portfolio from Yahoo, then calculated the monthly holding period return, then the average holding period return for this 5-year period, and finally multiplying this average by 12. We put this information into the CAP model formula and obtained an expected rate of return for American Airlines of 11.20%. Dividend growth rate is a percentage representing the increase or decrease in the dividend that the company will pay in the following year. To calculate the short-term dividend growth, we apply the historical method. For this, we pull the historical dividend information from Yahoo and notice that over the last 3 years, the rate has been 0%. And we believe that due to the current market circumstances for COVID-19 and the impact of this in the airline industry, the management of American Airlines will try to pay out the same dividend amount of $0.40 per share to keep investors. For the long-term dividend growth rate, we don't know the impact of COVID-19 in the company customers and the company financial condition as a result of operation. For that reason, we have determined that the appropriate long-term of growth dividend rate for American Airlines would be 2%. As mentioned before, in order to determine the intrinsic value of American Airlines, we apply the non-constant growth stock method. For that, we assume that dividend 1 will be $0.40 per share, and for dividend 2 and dividend 3, the growth rate will be 0%. After that, the growth dividend rate will be 2%. We assume an expected rate of return of 11.20%, and we calculate the present value of dividend 1, dividend 2, and dividend 3. And since after 2022, the dividend growth rate will be constant, we considered it a growing perpetuity, where the present value at that time will be $4.43. The sum of all present value was $4.20, that is equivalent and the intrinsic value of American Airlines. As of April 24, 2020, the stock price for American Airlines was $10.25. When comparing this current market price against the intrinsic value of $4.25, we highly recommend to the investor to sell their stocks of American Airlines. The intrinsic value is 59% lower than the current market value, and in the long run, this can be a risk for the investors.